It's about that time of day again. My name is Joseph. It's Monday evening, March the 6th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish and trying to finish off a measured move, but one key level of support is not only holding things up, but also telling us exactly where to be looking for the next selling opportunity tomorrow. The S&P is bearish, but trading smack in the no trade zone tells us to be patient and look for one of two scenarios setting up for tomorrow's session. The gold is bearish, but multiple levels of support are giving us two specific areas we need to watch closely for additional selling opportunities tomorrow. The euro is bearish after a strong move lower today, but the way today's session closed right at the lows is telling us we got to wait for more proof tomorrow before selling more. The FDAX is bearish and range bound this evening, but one simple clue is a big concern tomorrow, and we have to be looking for opportunities just outside the range. Boy, I have another great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for the second full week of the month of March. Hope you guys had a great weekend. We're back in the action, though, once again in this nightly newsletter, Monday through Thursday evening, right before 8 p.m. Eastern Time. I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. It's only a small snippet on the YouTube channel. Not to worry, in the description of the YouTube video, follow that link and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Many different ways you can follow me on social media. I'm always posting important links and charts and updates throughout the day. Grab me on social media in the lower left-hand corner. Right below the video tonight, you can download all the charts you see me using in tonight's video. How easy is that? All the charts in tonight's video, you can download those charts by following that link right below the video tonight on our blog. And please don't forget, you're going to learn more with me in 90 minutes on my free pass and anywhere else on the interwebs. I can guarantee you that. Grab that free pass on the upper right-hand corner. If you're not an advanced member here at School of Trade, make sure you grab that free pass and join me as a guest or two this week in the trade room. And please don't forget, if you're brand new here to the SOT community, we got a great frequently asked questions page on the right-hand side, and I'm always standing by to help you guys out 24/7, 365. Hope you guys had a great week. Boy, hope you had a great weekend, I should say. They're back in the action here, though, for this week here, filled with opportunities. Let's take a look at the schedule for tomorrow. No major news. We got an announcement there from the RBA tonight at 10:30 p.m. Eastern Time. Not expecting that to be too big of a market-moving event in the overnight session here in Asia. I do want to remind you, though, please be aware tomorrow, Tuesday, March the 7th. We get some early morning news from Great Britain at 3:30, but pretty much the meat and potatoes here tomorrow will be at 8:30 a.m. We get the international trade and merchandise trade tomorrow morning at 8:30 a.m. before some news tomorrow night from Japan and China. So really not a lot on the schedule here for tomorrow. Really the meat and potatoes tomorrow morning will be here at 8:30 a.m. Eastern Time. So get at it early. Find those opportunities after the news comes out. Don't forget, we'll be in our trade room tomorrow morning executing the plan we talk about tonight as of 8 o'clock Eastern Time tomorrow morning. Come out and join us in the trade room. We open up at 8 o'clock Eastern Time. Speaking of the plan, let's put this plan together, shall we? Starting off with crude, we'll go crude, S&P, gold, euro, and FDAX this evening. Crude is bearish and trying to retest today's low, but a rising support trend line is holding things up right from the sellers of finishing the move. The bears took control just before the end of the morning session today, and now we're in pullback mode, waiting for the sellers to enter the market at higher prices. Sellers will be wise to avoid selling into this support trend line, knowing that a buyer failure up inside that battle zone or a successful breakout pullback below that trend line will be the most reliable selling opportunities tomorrow. Very good example here today. Boy, a real roller coaster ride here across the board today. It was a real wacky Monday. Of course, we saw the day started off this morning on crude with a real strong bear move down, but by the time that we came in at 8 o'clock Eastern Time into our trade room, we had already made a move, held a pullback, and we were already bullish at that point. With that said, that led to, of course, connect the dots there, right? A bull channel, right, gave us ample opportunities here to buy the low of that bull channel. So the buyers were fat and happy as of about 11 o'clock this morning, and you can definitely see they got their fill, because as this market quickly failed on the pullback to the moving average, it sliced lower. Now, remember, a move lower in a bull market is not the indication of a trend reversal. However, right, when those sellers do not fail and we don't run back to retest the high, when the sellers hold that pullback, now this does become a bear market. So long story short, what appears at first glance to be a deep pullback here is most likely telling us right now these buyers have given way to the sellers taking control, right? That was late in the morning session today, just around 11 o'clock to 12:30 p.m. Eastern time. Now, of course, we have a big bear, or should I say a relatively medium-sized bear channel here, and of course those bears are trying to go back up, right, or back down and retest that low. So pretty easy to see here, right? The market collapses off the high, turns bearish. The problem though is when we turn bullish to bearish, usually that is seen as being a low point on the chart, right? Bears don't want to sell low, they want to sell high. Price has to go higher so bears can step in. Well, the problem here now comes in with this trend line. This trend line, of course, I wouldn't normally draw this trend line in like this. I would draw it a little bit steeper, right, like that, but it's difficult to argue with the fact that they keep on respecting that level. I may not agree with it, but I have to, of course, agree with the market. Last thing I want to do is go against the market right now. I need to be aware they are showing us proof that they're holding that trend line as support. Knowing that we have the bears in control, knowing that we have a long-term objective right now, of course, medium-term objective is to go back and retest that low. Long-term objective is also to get back to that low, but not so much for the low, more importantly for the measured move. So measured move right now is kind of the medium and long-term objective. We get that prior day low at 52.55. Those will be some targets those bears are looking for right now. First, in the short term, trying to get back to 53.02. If we can get back to 02, it should be pretty easy from there to get down to that low, complete that measured move. And we may see this market slip and fall all the way through to retest that prior low of day from last week, right, at 52.55. All we got to work with right now is get through that darn trend line here. There are two scenarios I'm going to be looking for tomorrow. Scenario one is where we can go up. Buyers will try to hold the pullback and run back to the high. I'll be looking for those buyers to fail so we can sell high with enough room, right, so we're not selling into that trend line. The big variable right now is going to be how high do we have to go, right, to allow those buyers enough room, to allow the sellers enough room to want to sell this market without selling into that trend line. So again, assuming we can get up high enough, right, buyer failure, and break back through. The real objective right now will be try to get below this trend line. This is always the most reliable trade. Get below that trend line rather than using it as support. Now we can use it as resistance. So keep an eye on these two setups here tomorrow, right, for the most reliable selling opportunities here on the crude. As the market goes lower, I do have a pending bear channel here. These are always very much at best case, right, a possible support area, right, at worst case, nothing at all tomorrow. I'm a little bit just kind of seeing what this trend line might do. So watch and see if we do happen to bounce off it, right, or even more importantly, connecting those lows can be used as resistance overhead. So watch that, right, watch that falling resistance here overhead, try to incorporate that with the battle zone, right, get back below that trend line. Those are going to be, right, your most reliable selling opportunities going forward. One thing you want to keep in mind is that, right, is that measured move. Make sure we don't trade too close to that measured move. So if, for example, we do get the big run down, this thing just slips and falls here. Remember, in a bear market, when you find yourself, right, into that measured move, don't sell into it, right? Find an area of resistance there and look for a trap, right? Look for that trap so we can sell high, right, without selling directly into that measured move. Same thing goes if we end up tumbling down to that prior low of day at 52.55. So again, price goes up before it comes back down. If it does just race lower here, right, just keep an eye on chasing after that move. We don't want to sell too far down towards that measured move. So get to it either as it goes up, with enough room down to that trend line, right, up, enough room down to that trend line, breakout, pull back below the trend line. If it does race lower, don't chase, right, look for that trap high and sell it back down again. Pretty easy there. What would it take for this market to become a bull market? It would take those buyers to see strength, and they'd have to hold a pullback right now. If they can hold that pullback, then we can start looking for this as a buying opportunity. Same thing will apply though, right? If they do hold a pullback and this does become bullish, want to make sure you're aware what the objective is. The objective, of course, will be back up to retest that high. So if it does go up, hold a pullback, and if that pullback does run back to the high of day, it's very similar we talked about earlier, right? Don't chase it, look for that trap low, right, and buy the dip, right? Buy the dip. First, though, we've got to see this market turn from bearish back to bullish. Bears have control right now on crude. Don't overthink it, and make sure you don't chase that move lower if this thing really tumbles tomorrow. How about the S&P? The S&P is bearish and trying to finish rotation back to the low of the range and possibly a pendulum swing and measured move target for tomorrow. The bears took firm control of this market from the very first candle of today's session with a spike in range. The bears lost interest in selling low. You can see that price got rejected down around that low of the range. Price then corrected up above the high of the range, and now the sellers are riding the move back down again. Assuming you didn't grab that beautiful buyer failure at the high of the range, we now need to avoid trading in the middle of this range and look for the selling opportunities at the high and the low of the range tomorrow. What a beautiful chart here tonight on the S&P. We're continuing this bearish momentum that we talked about late in last week's session. We saw the market turn bullish to bearish last Wednesday into Thursday. And of course, you'll notice here, boy, oh boy, that day starts off firmly in control of those sellers. That strong move down, you might make a case for this being a little bear spike in channel. I could definitely see this, right, being a bear spike in channel there, then up and back down. I'm calling this a little bit differently here as a bear spike and range. That bear spike and range obviously is rejected at the lows. You can see those sellers, right, reject that lower price. That's a very similar situation we're going to be talking about in a moment on the euro. So stay tuned for the euro analysis later on. We'll kind of piggyback on this idea, right? So strong move going lower. The bears draw weary of selling low, right? They wait for it to correct up and they slam it back down to those lows. Very obvious there. Once you get back down to those lows, that low price is rejected. Sellers eventually grow weary of selling low there, and they don't want to sell low. I'm looking at this now as a spike and range, right? Double top, double bottom. You know, again, you could look at this a few different ways. It's also an option here for this to be a spike and wedge. I think the spike and wedge has a lot of opportunity to it with a wedge target down there at 59.5. If you missed the lesson last week on trading wedges, please don't forget it's a very, very important topic here because we now know those bears will be trying to get down to that wedge target. The wedge is a little bit shaky here right now. I like this a little bit better as the spike and range. What is very interesting though is with that spike down into a trading range, the pendulum swings up above the high of that range, and now we're looking for a pendulum swing back down again, right? Whenever we see a trading range, did a lesson on this topic, the pendulum swing, which you can find on our blog or on our YouTube channel. It was last week's session. Make sure you go back and watch that chapter on the pendulum swing, right? I think it was from last Wednesday. It was last Tuesday or last Wednesday evening's newsletter. You can go back and learn more about the pendulum swing. So you got some homework on that, right? Check out the wedges, right? And check out the pendulum swing from last week's nightly newsletters. Now, with that said, again, that pendulum swings higher. This is obviously here now, just an opportunity here for the bears to sell into this move. And this happens quite a bit, right? It happens quite a bit. We see a real strong move down, right? The sellers don't want to chase after it. Price has to correct up, right, to attract more bears into the market. As more bears enter the market, right, the buyers become outnumbered and price collapses back down to retest that low. Again, we're going to talk more about this on the euro as we go forward, right? So now we got that chance to sell off the high here now, right? And now those bears are trying to finish the job, right, down to that low. They'll probably end up pushing it a little bit lower than that. You get the measured move, of course, AB equals CD. Right, there's that measured move target down there around that 64.5 area. At the same time, we have a double down. Very, very surprising that strong move, that big red candle, right? That's what you go and calculate the double down off of. Really surprising they didn't get that double down target filled. And you can definitely see those sellers were a little bit concerned about selling low down there. So here we are now inside that middle of the trading range. You always want to break those trading ranges into 1/3, 1/3.